Oh, there we go. I think that's my cue. Good morning, everyone. Welcome to the Audit and Finance Committee meeting for November 1st. I will remind everyone that this is being recorded. I would also ask that we hold any public comments to the end. We will take those at the end of the agenda. The first item we have on the agenda is the acceptance of the minutes for August 2nd, 22 meeting. I'm assuming everybody got those and reviewed them. Having that being said, I will entertain a motion to accept those minutes.
Move approval.
All right, I need a second.
Second.
We have a first and a second. All those in favor, note by saying aye.
Aye.
Any opposed,
Aye.
like sign? All right. Minutes pass unanimous. On to the next. We have Mr. Lance Schmidt and also Julie Fowler from CLA here with us today to do a discussion on the upcoming district audit. So with that being said, Lance and Julie, take it away.
All right, sounds great. Travis, just want to make sure you can hear me okay?
Yes, sir, absolutely.
Great news. I would also like to share my screen, if that's possible. I just got a short presentation to share with you. If you guys could just confirm you can see my screen right now. All right, sounds good. Well, again, we certainly appreciate the opportunity to be here today to be able to present to you guys. Just for the record, my name is Lance Schmidt. I'm a principal with CLA, and we serve as your external auditors. And then with me today, I've also got Julie Fowler as well, who will be assisting with the audit as well. So what I wanted to do was just give a quick update on where we're at with the audit, ask a couple of questions, give you some of the highlights, and then if there's certainly any questions, we want to be able to take those as well at the end of the meeting. So with that, I'm going to jump right into our short presentation here. If you don't know about CLA, just want to give you a very quick high-level overview. We are a national firm with a local presence. We've got 7 offices in Florida, 2 offices actually in Polk County, 1 in Lakeland, 1 in Winter Haven. We're very heavily organized by industry. So Julie and myself really spend the majority of our time serving state and local governments. When I say the majority of time, it's near 100%. And so certainly glad to be able to work with the school board, since we work with a lot of governments, but there's only so many that are local, and we're glad to be able to work where we live, which is kind of nice. So we do appreciate that. Again, just a little bit, some facts on the screen there. I won't go over those. I think the most important thing is, what does this mean for the school district and the team that we have actually on the audit this year. I mentioned to you that we're heavily organized by industry. Everyone you see on the screen here does work in our state and local government industry, meaning they spend either all or nearly all of their time serving local government entities. So I'll serve as the overall engagement principal for your audit, ensuring overall satisfaction and that we stay on our timeline and do a high quality audit. Julie Fowler will be assisting me in my role and serving as kind of the lead on the single audit, making sure that all the compliance testing that we do is in accordance with uniform guidance standards, and that we get that out in a timely fashion. She'll be assisted by Danny Springfells. Danny Springfells, I note here that she is a Polk County based employee. She's actually overseas at the moment. Her husband, who used to work with us as an Army reservist, got called into active duty. So they're actually in Germany right now, but she's still working with us. Glad that we can kind of support her, even though she's not here locally. She can still assist us on our audit engagement. So we'll have Danny Springfells. Then we've got Blaine Butcher and Andrew Osborne, both, one's a director, one's a manager. They'll be assisting on the financial side of things. Andy will be the primary lead, Blaine helping with some of the more detailed review and more technical matters. Then we've got Brad Winninger. Brad is a senior with our firm, and really will be the main point person for a lot of the kind of day-to-day items that we'll need so that we can complete the audit. And then lastly, I mentioned John Turlow. John Turlow is one of our national consultants working with our team, who's kind of assisting with our lease implementations and the new lease standards that are out there, making sure that we get that correct. And then lastly, wanted to just mention that we do have an independent quality reviewer that actually, once Drew and I are done with the audit, will look over the audit to make sure that we've complied with all professional standards and that we've performed a high quality audit. So that'll be our last layer of review once we're done. So, and again, did just want to note this, the number of people that we have based here in Polk County as well. Wanted to spend just a minute and talk about some of the new I'll say impact or noteworthy items related to our audit. I mentioned earlier GASB 87, which is a new governmental audit standard specifically addressing leases. The primary impact from GASB 87 is that any leases, basically any operating leases that you previously would have had that existed, essentially underneath using some of the old terminology, basically become a capital lease. So we'll have a right to use asset on the books and also a corresponding liability for every lease that exists. One of the nuances of the new lease standards that is a little bit trickier, because that seems rather straightforward at the high level. One of the things that's a little trickier is this concept of embedded leases. So what we'll be doing is kind of our two-step approach for testing leases is, one, to make sure that we've got the population complete and we know what all the leases are. The second part is, are they recorded correctly on the books? The first part about completeness, when it comes to embedded leases, if, for example, let's say the county was to procure services from a specific vendor, and as part of that vendor contract, there's a capital asset component that is given to the school board, we would need to make sure that the value of that capital asset is identified and capitalized on the book. So a good example could be, maybe there's a disabled bus service or some other type of service, and there's a dedicated vehicle assigned to that service contract. That service contract would be required to, we'd have to evaluate, okay, is there a capital asset component here, and then split that out from the payment. So maybe we're paying, $10,000 a month for that service, over 5 years. Well, as part of that, if we've got a Polk County school bus that, is labeled Polk County, and you've got the rights to direct where that bus goes, that's deemed to be your asset. And we need to make sure that gets capitalized on your books and reported accordingly. So essentially we have to review pretty much, we're looking at anything that has a recurring payment and see if there's an embedded lease. The other common examples, you get a coffee service. I don't use that because it's so immaterial, but the concept of, you get coffee service, and as part of the coffee service, they throw in a free coffee pot that you use. Would be a capital asset that, you would need to evaluate. Again, capital asset kind of thresholds, would be considered, and also materiality. But that's another good example. So we're going to spend a lot of time making sure that we get this right in the year of implementation as it relates to leases. The second thing that's a little bit new this year, and you'll notice this whenever you see the final audit report. So we do have some new audit standards related to SAS 134, which does change and impact the auditor reporting on the financial statement. So as many of you know, I know being in the profession or being around the audit or the finance community, every couple of years it seems like we got some more changes, and this is one of those years we have changes. So we've had to reevaluate and redo a lot of our risk assessment forms to more specifically address the risk. We communicate those risks, as part of our engagement. And then you'll notice the audit report is significantly changed. It's going to start off with our opinion and then kind of be in a little bit of a different format, a different order when you see that. So a lot of work that goes into this that may not be apparent on the face. You may say, we got an audit report last year and we got one this year, so what changed? Well, there was a lot of stuff behind the scenes. Questions need to be asked, forms need to be updated, et cetera, related to a lot of those new audit standards. Before I go on to the next, any questions on GASB 87 or SAS 134 I might be able to answer? If not, I don't see any questions. I'll keep moving along. As part of our audit, especially an entity the size of the Polk County School Board, we do rely on internal control, making sure, one, that those internal controls are properly designed and implemented, We will test those internal controls and make sure they're operating effectively. So we're going to look at a lot of different things. Some of the key areas we look at are P cards, which we do have some internal audit assistance in that area. We will also take a look at payroll and cash disbursements as well. Those being some of the bigger areas that we want to make sure we got solid controls on, just because of the volume of transactions. It's very difficult for us to audit every single one. So we want to make sure those internal control structures are sound. At CLA, we do rely heavily on data analytics for our audit engagements. So we actually obtain every single general ledger transaction when we perform an audit. We're able to take that data. We're able to run various analysis on the general ledger to essentially, it does two things. One, it does make the audit process a little more efficient because rather than us requesting multiple documents and then assessing each one of those documents for completeness and accuracy, we can get the GL, tie it out once, and then pull a lot of our samples from there. So it does provide a little bit of efficiency for staff internally. But in addition to that, it allows us to really identify those anomalies. We're looking for the one transaction that could be wrong that would materially misstate your financial statements. With the data analytic tools we have, it gives us a little bit of an upper hand on trying to identify those and question those transactions that don't make sense. Next, we will rely on several component audits of other auditors. So the charter schools and also the internal funds are audited by other auditors. So we will be kind of working with management staff as they collect those, that we're reviewing those other audits, making sure their audit reports are sound. There's no other exceptions to those audits, and that ensuring that we're getting all those so we can appropriately replace reliance on those audit reports. I do not expect this. We've had this happen on other clients, but if for any reason we saw something that didn't make sense or there was a qualified adverse opinion, we obviously would want to take a look at that closely and then come back and we would let management know that there may be additional procedures we need. Don't anticipate that, but it is something that has happened from time to time. We get peer reviews of all those firms as well, just to make sure they've got clean peer reviews. And if they don't have clean peer reviews, there could be some additional work. But again, I'm not anticipating that. Excuse me. As far as some of the non-audit services that we will perform this year, kind of working with Heather on the financial statements. A couple of years ago, we did a project assisting the team with kind of redesigning the financial statement process to maybe streamline it and make it a little bit easier. Here at CLA, we do close to 20,000 audits a year. So we've got some pretty good practices that we wanted to, when we saw what management was doing, we said, hey, we might be able to help you out. So we spent, it was 2 years ago, a little bit of time kind of assisting with that. Last year, no problem at all. Team was able to prepare the financials using some of the assistance that we were able to provide, which was awesome. This year, with some of the turnover and some of the key spots, what we are going to do is just provide some assistance and help draft those financial statements, but really focus on the training aspect so that your current team can carry that forward into the future without our assistance. So we're not, we want to share any tools or resources that we have to really empower the team to run with that in the future. So that is the primary non-audit service that we'll be providing throughout the course for audit. Obviously, we want to provide best practices, feedback, anything that we see that might be helpful. We will share that with with management and the accounting team as we see it. So, and then lastly, I kind of mentioned that I think everyone knows probably a little bit of turnover that's happened in the accounting/finance department. We're gonna, because of that, that is an increased risk for us. What that simply means is that we're just going to look closer at that. So a couple of things that we want to do is, there may be some areas where we lower our scope just to make sure that we're capturing our testing appropriately. In addition to that, anytime that we perform an audit on an organization we've audited before, professional standards require us that we kind of mix it up so that, Heather and the team don't know exactly what we're doing. And so this year we are going to take a look with the great resignation and the turnover. And I know it's probably been widespread, not just in the accounting department, but probably other places as well. We will be doing some additional procedures to make sure that any individuals that terminated employment during the year, that there were no other payments made after their date of termination, besides maybe that last payroll check and or the last expense reimbursement if there is one. So we'll be looking at that closely just to make sure that the proper cutoff there as those employees leave the organization. So I know I just shared a lot of information. Any questions on any of that so far? All right. I did just want to ask, since as we talk about fraud, one of the things that we are required to do is ask governance, in this case, this committee, if there are any fraud concerns, allegations of fraud, known instances of fraud, or any areas where you'd like for us to maybe look a little bit closer as it relates to the audit. I don't want to bypass this very important question and just give anyone that wants to speak up a chance to share anything. All right. Seems like everyone's good, so I'll assume that there are no concerns in the fraud area, so which is good. And with that, what I'd like to do, since Julie is going to be heading up our uniform guidance audit, Julie, I don't know if you want to spend a minute and maybe just talk about some of the programs, the work we've done so far, and the programs we're going to be looking at this year.
Absolutely. Thanks, Lance. So we have received the first draft of the schedule of expenditures of federal awards from the management team, and we've run through the risk assessment process on those programs. And we've determined that there are three major programs that will need to be tested this year. The first is the Education Stabilization Fund. And you may recall that that was one of the programs that has a lot of the COVID-related funding. It actually has 5 sub-programs underneath that heading. And all of those get tested together. This is a very extensive grant program. So it's going to require quite a bit of effort on the compliance side to make sure that we're testing all of the requirements that the federal guidelines require of auditors. Next up, we have Title I grant, which is a well-established program within the school district. And then finally, we have the Emergency Connectivity Fund, which is also a COVID-related program. For those who aren't as familiar with single audit, the federal government did ask the federal agencies to identify programs that should be considered higher risk and basically require us to test those as major programs. And the Education Stabilization Fund and Emergency Connectivity Fund both fall under that heading. So these are programs that are going to be heavily scrutinized, not only by us as part of our audit, but also by regulators in the state as they continue to monitor to ensure these COVID-related dollars that came down to the local level are being spent appropriately.
Any questions on the single audit? All right. With that, again, just want to introduce ourselves, Julie Fowler, Lance Schmidt. If you guys have any questions, I do have our contact information on the screen here. We're glad to hear from you by email, phone, can include our cell phone numbers on there as well. So if you've got any questions at all, or if anything comes up after the meeting where you say, you know what, Lance, I really wanted to ask this question, but maybe I didn't want to, wasn't sure how to ask the question, feel free to give us a call. We're glad to chat about any questions or concerns you may have. So.
All righty. Thank you so much, Lance. Appreciate you guys.
I appreciate it. Thank you.
All right. Next on the agenda, we have the finance update, and that will be given to us by Heather Jenkins, the CFO. Good morning, Heather, and appreciate you.
Good morning. Today, well, I'd like to go ahead and speak to, we have had an addition of some new employees in our finance office. So I will bring them to you next time so that you can meet them all. But we have a senior director, Mr. Alain Nunez. Lauren Hinton is our new director of accounting, and we've done a bit of a reorg and added an assistant director position. So a gentleman in our office, Luke Whitty, has moved into that. We wanted to create a path and a more streamlined structure. So what we did is took a look at all of our functions and actually removed a few positions, changed some things around, and now I think we have a really strong team. So I'm excited going forward. Ms. Matthews sent out some materials to you guys, and I would like to share my screen as well. First we'll be going over the budget. So For 22-23, our budget was approved by the board. This is a snapshot of our financial summary. Our total budget is close to $2.4 billion. You can see the breakdown here. General fund is a little over $1 billion, which is exciting. We actually hit that point last year for the first time. We have special revenue and food service for $89 million, special revenue other, $124 million. And here you see the special revenue ESSER, almost $283 million, as Julie was discussing. We are one of the largest districts, so we have already begun the monitoring for ESSER, and our federal programs department is working with the state and federal government to provide documentation showing how we've spent our funds. We also have our capital outlay fund, $446 million. That includes our sales tax, our impact fees, local capital outlay, and internal service, internal accounts of our schools, and then our agency funds. Our budget document is posted online. It's about a 216-page document if you'd like to look at any sections in depth. Do y'all have any questions regarding the budget? Okay.
Heather,
Yes.
I'm happy to see the highlights and overview of the budget at the beginning of it.
Oh, thank you. Yes, we try to take your suggestions and incorporate them. So they are most appreciated, and anything else you all would like added or would like to see in a different view, we're happy to be there and provide that. Next, I'm going to switch over to our investment summary. Several months ago, we started making some changes. I've worked with our investment advisors to provide us a snapshot. They did come and speak with y'all last time. And here we have a breakdown on a good note. Interest rates are rising. That's good for us, bad for those seeking loans. Our current allocations, let's see, are listed here. Okay, so we have our breakdown of all of our investments. You can see that we do have them split between our general fund and also our sales tax and impact fees. We're required to keep those separate. We've listed our ratings. They are all at least A ratings. Here you have our portfolio summary. We have $190 million total invested. There, again, it's broken out. We show our short-term and our long-term investments. We actually have a meeting this week. One of the things that our department does is we get together with our investment advisors monthly. So we're going to talk about where our investments lie, where our cash is, what the best opportunity for us to utilize our funds would be. We, during this time of year, we have to keep a very close eye on cash flow because our largest income that we receive is in November or December. It's our tax receipts. And a lot of districts have to actually take out something called a tax anticipation note, which is a loan that will help you continue to pay your bills until you start receiving that revenue. Fortunately, with our cash base, we haven't had to do that. We just monitor and keep our cash very liquid. And then once we receive those funds in, we reinvest back into our pools. But we do still have a large portion invested. We do still have a good supply of cash on hand. And we will continue to monitor that and then move more heavily back into the market probably around December and January. This is a relatively short report, but it does give you the breakdown. It gives our percentages, it gives our rate of return, and then you can read a little bit about our investment managers. Do y'all have any questions about our investments?
Heather,
Yes, sir.
on page 4, you might just mention the Fifth Third Bank long-term investments.
Mhm.
The book value is higher than the fair market value, and how that can occur.
I have to move my my Zoom meeting because it's affecting my ability to scroll on my screen. Okay. So I'm sorry, Mr. Patton, what was your question? Or statement? Jennings, sorry.
If you look at Fifth Third Bank, the long term, the market value is less than the book value.
Yes.
And how that occurs.
Yes, sir. It's due to the interest rates in the market currently. And so when we invested with Fifth Third, part of our investments are at a secured rate. So we have different groups of sub investments. And with the fluctuations in the market value, our long term is actually yielding a higher rate than what the current market yields.
Is that
Go ahead.
Is that expected to continue? I mean, this is as of June, and as we know, the interest rates have been raised at least 1.5, if not more.
It is, but Fifth, yes and no. Fifth Third is one of the ones that we are taking a little bit of a deeper dive into this week. So it's possible that we will have to use some of those funds as we continue through November and December. Like I mentioned earlier, we've not done anything with that, but we also have a new account manager with them. So that's one of the things that I'm going to discuss with them, all our investments, how they're structured, and whether or not we need to move them into different groups within Fifth Third, or if we have other opportunities. For example, with Florida Fit, there are some new investment pools that are yielding much higher rates. So we just we're going to take a look and figure out which one will yield the best rate.
Thank you.
You're welcome.
All right. Thank you, Heather, for that. Appreciate you. The next we have on the agenda is the internal audit update. And with that, Carol, I'll let you take it away.
Thank you, Travis. Let's see, I will share my screen. Let's see here. Well, what have I done? Can you still hear me? Okay. Not sure what I did, but oh, here we go. Okay. You can see my shared screen. Okay. So the first thing we'll talk about is the outside support organizations. These are our PTA, PTO, booster clubs. They're required to file an annual financial report with the internal audit department annually. And we send reminders and work with school staff to obtain missing signatures, final reports for closed groups, and so forth. We received 115 out of 120 known groups, AFRs for known groups. The school's not filing one, even after several attempts and so forth. A couple of them were final AFRs that we were expecting, where the group no longer existed, but the account was still there and there was still money in the account. But the volunteers had long gone. So the school staff was just having difficulty chasing them down to get them to, number one, file a report, and number two, close the outside account. It happens there a lot, unfortunately. But those schools, there were 5 of them. They will receive a finding in the internal funds audit that Carrigs and Ingram does. And I'll let Davina talk to you about payroll. Davina?
Hi, good morning, everyone. This past quarter, we completed the audits for the 21-22 year with Paget Elementary and Inwood Elementary. Inwood Elementary had more than the average number and severity of findings. The principal did not approve 99% of the posting to SAP for leave and additional time work. Unrecorded absences were found for 1 employee in our sample week. The payroll secretary, a non-exempt employee, was not documenting her time work on a timesheet. A requirement of federal wages and hour laws, time record deficiencies and other non-exempt employees, and leave forms and errors and omissions. We also issued the summary report for the 21-22 year, and 5 out of 12, 42% have more than the average number and severity of findings. 100% had deficiencies in time records, SAP posting errors, and the principals not approving all payroll entries in ASAP. 83% had leave form errors, 58% had non-exempt employees working outside of their normal hours without approval or adjustment to pay, and 50% had unrecorded absences.
During the course of one of these routine audits, we learned that the district had launched a tutoring program utilizing both teachers, which are exempt employees, and paraeducators, which are non-exempt employees. I worked with management to ensure compliance with labor laws and the collective bargaining agreement, and to create written procedures to be implemented consistently throughout the district. The district established written guidance approved by the union that includes the following. Non-exempt employees must take their breaks during their normal workday as specified in the collective bargaining agreement. Document time worked beyond their normal work hours participating in the tutoring program, and receive additional compensation for only those hours worked beyond their normal workday. If anyone has a question at any point in time, please just unmute and ask your question.
We also began the payroll audits for the 22-23 fiscal year with Stevens Elementary and Sykes Elementary. Stevens Elementary had more than the average number and severity of findings. The principal did not approve any posting to SAP for leave and additional work. Unrecorded absences assisted for 1 employee in our sample week. 5 employees were not paid for pre-approved additional time work. Paraeducators, non-exempt employees, were not documenting time work on a timesheet, a requirement of federal wage and hour laws. Deficiencies were found with time records of non-exempt employees and leave forms. And on Sykes Elementary, we had exceptional record keeping and adherence to payroll laws and policies. They had only 1 finding for a leave form not containing all required information, which is very rare.
Yes, it is. Thank you, Davina. Travis, did you have a question earlier?
Yeah, so on both of these occurrences at Inwood and Stevens, we have a percentage of, did not approve 99% at Inwood, at Stevens did not approve any, so that's 100%. I would like to know, and just for sake of, severity, what is 99%? Is that, 100 occurrences? Is that 5 occurrences? So to me, the severity, obviously 99% is bad, 100% is bad.
Mhm.
But to me, I think it increases maybe another red flag if, there are 200 of these that are
Right.
99% of 200 aren't being done, or is
Right.
it, 10?
It is a large population because on this, we run the report from the beginning of the year to the time of the audit. So because I believe it was Sykes, no, who was it? Sorry, Sykes had a great audit. Inwood, that was a 21-22 audit. So that would have been for the whole year. And then the Stevens Elementary would have been probably for about the first quarter of the 22-23 year. We can get you exact numbers if you would like.
I think it would be something to email the members, just to
Okay.
let them know a little more of a deeper dive into that, get some granular numbers to say, just so I can better understand, because like you said, and also there's a time frame there too. Is this
Right.
the whole entire year, or is this the first quarter of that year?
Right.
I think that makes it helps you, I guess, digest it a little better if you have a little
Right.
bit more.
Yeah, it depends on when we do the audit. We try to bring it up as current as possible. So like for, the Inwood, we were able to do it for the whole year because of the time frame when we perform the audit.
And my final question on that is obviously, Sykes had an exceptional record, so we like that. So, and then I'm just asking for an opinion here. How is there such a large disparity between the two? I know that we constantly do training and we constantly advise, principals on how to do these things. That is, to me, that's night and day. That's a big difference. So
It
if somebody's
is.
doing really good and somebody's not doing
Right.
so good. And
Right.
so what's the difference in the two of those that you see?
Yeah, it's an intangible. I mean, obviously, it's just the experience of, or the knowledge of the principal and the payroll secretary. This is very rare to have only one finding. I can't remember a school where we've had this, but we certainly have some that do a very good job. And of late, we've tried to give them sort of a report card to say either, hey, you're doing a great job and we want to commend you, or, hey, this is seriously not good and you need to pay extra attention to it. So we've had some where we've commended recently, but this one is by far the best. Yeah, that's all I know is just that the secretary and principal, just for whatever reason, training or whatever experience, are just up on everything and they're doing a great job. And unfortunately, you can't go by just experience, because we will do audits of schools that they've been there for a very long time and they've just not been doing it right for a very long time. So it does vary. And so again, I always go back to these audits are the best way to, number one, tell how people are doing. And then number two, to give them that one-on-one training, because when they get through with an audit, without exception, they say we've learned something. So.
Excellent. Thank you for that.
Anything else before we move on?
Carol, can I
Yes.
say something real quick? You
Sure.
mentioned payroll secretaries. So we do know that this is an issue. And as Carol said, we continue to provide training. We do a monthly call with our secretaries. But one thing that we found out and we've worked with our union with is for our secretary positions next year, they're going to be changed and differentiated. So we'll have a principal secretary, a registrar, and a finance secretary. We found that in the schools, different positions are doing different duties, and it's hard for us to reach and really provide support. So we're going to delineate those a little bit more clearly so that we have specific groups of people doing specific things. And we're hoping that that will help and that we'll be able to be there a little bit better for them and give them that specified training.
Yes, thank you for that, Heather. Next, we'll talk about the annual purchasing card audit that we do here in internal audit. We did this for the 21-22 fiscal year. The district had 724 purchasing cards, credit cards, assigned to administrative personnel. Purchases totaled $6.5 million. And we chose a sample of 25 schools that included 29 cardholders. The district auditors, CLA, Lance and his team, they rely on internal audit services work in this area of purchasing card audits, as well as payroll audits that we just discussed. We've provided them with a copy of this audit. An online refresher course for purchasing card usage is required annually. Four cardholders did not take the course, even after several reminders. So that was a finding in their report. And following are our other audit findings. We had one instance of order splitting, and that just means we have a maximum you can spend on a transaction or for a month. And, you know, if you divide it into two purchases to avoid that limit, that's obviously a violation. So we had one instance of that. We had 26 disallowed purchases. That sounds bad, but it's not necessarily, you know, fraud or anything. It wasn't fraud. There were 24 of them that were bid items, like primarily toner, where they should have purchased from bid awarded vendors and they did not. So there might have been a cost savings there. Certainly an agreement that we had with these bid awarded vendors that was, you know, not honored. And we had 2 travel upgrades by one cardholder, which are not allowed. And that cardholder had to repay those upgrades. We had insufficient receipts for 23 purchases. They have to upload a receipt to the system, and it has to have everything, the date, the vendor, the itemization, the total. We look for all of that. And 95 purchases were coded incorrectly to the wrong GL account primarily. A TDA, which is our temporary duty assignment, our travel authorization form, was not attached for 25 travel related charges. And sales tax was paid for 7 exempt purchases. Now, the accounting department caught many of the errors, the ones that I have asterisks by. They caught many of those and corrected or sent them back to the cardholder for correction. But to the cardholder, we write that up as a finding because they submitted it incorrectly, and it takes the time of the accounting staff to have to reach back out and request this additional information. I would say probably 80% of those were probably caught by accounting, so that they're doing a great job in that area. And then lastly, we have the agreed upon procedures that Car Riggs and Ingram is doing. They finished the Bartow High School Master Plan Phase 1 and found that RADA owed the district a refund, small, but $2,571. And over the years, the work that they've done has resulted in a net savings to the district of over $354,000. Now they're moving on to the Davenport Elementary project. And that is it for an internal audit update.
Carol?
Yes.
Hi. Going back to page 7.
Yes, ma'am.
And we look at the different findings across the district. So my question is, comparing that to ones in the past, would you say in all these areas we're getting better, staying about the same? You know, because there's always audit findings, obviously.
Right.
But it just seems like the percentages are up. Maybe it's the number that we started with. I'm not sure. So I just wanted to kind of get a feel for that, because y'all do an excellent job of providing training. I know we have a lot of, you know, changes in those responsibility areas, and I understand that. Just wondering, are you seeing a trend upward, downward, or about the same in these audit findings for the P card usage?
Yes, ma'am. Thank you for that question. You may recall that when you guys received the report, I had a graph that was a 3-year trend, and that compared these same categories of findings over 3 years. Now, I will say that it's a different sample, a different group, because we do about 25 schools and departments per year. So it's a different group, but still. I do that, just say, okay, how are we as a district improving or not? And it's a mix. Probably about half of those, we saw it come down. And then probably the other half went up. So for example, order splitting was down, disallowed purchases were down, insufficient receipts was up, sales tax paid was up, the TDA not attached was down, and incorrect accounting was up. So we do look at that and compare it to prior years to see how we're doing as a district.
Thank you for that update. I do appreciate it.
Yes, ma'am. Any
All right.
other questions?
All right. Thank you, Carol. As always, you guys do a wonderful job and we appreciate you.
Thank you.
Next, we're going to open it up for public comments. We'll take a few seconds if there's any out there. Having heard none, we'll move on to the final part of our agenda. The next meeting is pending the completion of the district internal audits accounts for January. We're going to have it in January. Is there any update on that, Carol? We scheduled for January. We think we're going to be done by then.
I know that the internal accounts audit will be, Heather can, or Lance could tell us maybe more of a timeline for the district audit.
That, the district audit is January, February, depending on how things go.
Okay.
3 months would be the 1st of February. I don't know if we want to set it for then or.
I think it probably makes sense to go more towards February than January. There's no sense of having a meeting just for having a meeting. Let's be able to talk about something.
Okay.
All right. Any other comments from the group before we adjourn?
So the first Tuesday will be February 7th. Would you like for me to send out a calendar invitation for that?
Yeah, that works for me. And if we have any I guess response there, we'll work as needed. I think yeah, that's good for me.
Okay.
All right. Any other comments from the members? Staff? Well, I appreciate each and every one of you. Thank you for taking your time today. Wonderful as always. And we will speak again in February. And between then, happy Thanksgiving, Merry Christmas. Appreciate all of you, and hope to see you again soon in February. We're adjourned.
Thank you.
Thank you all.